evening, everybody. Welcome to this session on metrics and measurements of biodiversity and ecosystem services. My name is Petra Westerlaan. I'm a freelance consultant with a biology background and 10 years of experience in sustainable forest management, certification, and ecosystem services, with recently moving a bit into sustainable commodity supply chains. As the moderator of today's session, I will aim to facilitate interesting discussion with help of our three panelists that will contribute to today's discussion: Felicity Spores of the Gold Standard Foundation, Paul Smith of the Botanical Garden Conservation International, and Asger Olesen from FSC International. Before I'll give them the floor to introduce themselves and their work, I'd like to point out that there is an opportunity for everyone who is participating in today's session to engage in the conversation. Drop your questions in the Q&A so that we'll be able to bring them to the panel and encourage an interesting and lively discussion among our group. So now I'd like to give the floor to Paul first to introduce himself and his work. There you go, Paul.
Thanks, Petra. My name is Paul Smith, and I'm the Secretary General of Botanic Gardens Conservation International. We were established by IUCN just over 30 years ago, and we are the umbrella organization for the world's botanical institutions, botanic gardens, forestry institutes, and others. We have about 650 member institutions in over 100 countries, and our mission is to mobilize that botanical data and knowledge for people, biodiversity, and the planet. So we have a particular interest in trees, and over the last decade or so have been leading tree conservation efforts and also tree prioritization efforts, particularly red listing. So in September, we published the State of the World's Trees report, which is based on information around threat assessments of about 92% of the world's 60,000 tree species. And unfortunately, it shows that, that about a third, 17,500 species are threatened with extinction. So our interest in tree planting, restoration, and so on is also how do we incorporate that threatened tree diversity into restoration initiatives, and also how do we measure positive and negative impacts on biodiversity.
Sorry, thank you, Paul. Felicity, can you introduce yourself?
Yeah, hello, thanks, Petra. So my name is Felicity Spores, and I'm the head of sustainable finance at Gold Standard Foundation. Gold Standard is an NGO that was established in 2003 to kind of predominantly in carbon markets, first of all, because it was a situation in 2003 where there were so many metrics that there was a concern from civil society of a race to the bottom, i.e. people getting away with what they could with, rather than a race to the top where ambition and good practice was rewarded. So that's where we started, and then Gold Standard has now moved to support corporates with their Scope 3 emissions. And I'm heading up the series of work which is focusing on driving finance to sustainable development outcomes. And Gold Standard evolved from primarily looking just at climate to a sustainable development standard. So we're a modular standard that looks at climate and at least a minimum of 2 other contributions to sustainable development goals, including biodiversity. And as part of that, actually working with Asger and FSC, we will be working with IUCN, the International Union for Conservation and Nature, to deliver certification for their nature-based solution. And I think that's going to be a very interesting work to look how do we transform good practice into genuine value in the financial spreadsheets of impact investors. And impact investors includes DFIs, MDBs, it includes pension funds, it includes boutique impact investors as well as corporates, and I think that's quite an important thing. And so just to myself, I'm actually a finance specialist. I was working at the World Bank for 12 years, but started off as an environmental engineer doing auditing, so have a sort of mixed background, and really happy to be on this panel. Thanks.
Thank you, Felicity. Asger.
Thank you, Petra. Thank you all. Good to meet you. Yes, my name is Asger Olesen. I'm Danish, and I'm the Chief Ecosystem and Climate Officer at FSC. FSC stands for Forest Stewardship Council, and it's a leading forest certification scheme since 1994. And for us, certification is, let's say, the basis for good management. We provide rules and principles that can be used by forest managers and markets to understand what good looks like when it comes to sustainable forest management. But as the climate and the biodiversity crisis becomes more and more urgent, it's also clear for us and our constituencies that certification, let's say a qualitative assessment of what good is necessary, but increasingly we need also the quantitative element on top of it, how to quantify what good is. And that's exactly why this panel today is tremendously interesting for me and for us. How can we quantify what good is beyond carbon? And as concerns myself, I'm originally a geographer with a specialization in soil chemistry, working a lot on carbon cycles and ecosystems in the tropics, among other. I've been on a journey with land use and carbon markets for almost 20 years now, starting out as a project developer back in the Northeast, where it was all around carbon. And then in the last 10, 12 years, biodiversity, other ecosystem impacts have gained more and more traction, more and more awareness, as they rightfully should. But how to combine ecosystem impacts into one unit, if at all, that I think is a tremendously interesting and important discussion that we are to have. So that's also my background for this conversation, and looking very much forward to it. Thank you, and back to you, Petra.
Thank you all for your introduction of your work, your background, and touching already a little bit on the topics that we will be discussing today. I'd like to start with a very, beginner question. I'm not sure what the background is of our audience, but just to start off, what is a metric and what are the currently commonly used metrics for measuring biodiversity and ecosystem services among investors? Whoever would like to answer that question, please go ahead and unmute yourself.
Well, maybe I'll make a start with this. I think, this is one of the challenges, is that biodiversity is incredibly complex. And so coming up with a single metric is difficult. It's something that we have thought about in the context of plants, because plants sit at the base of the trophic pyramid. Basically, everything relies on plants, in habitat, at the habitat level, and so on. So, one approach would be to say that plants are a good surrogate for all biodiversity, as all biodiversity basically relies on them, at least in terrestrial ecosystems. The problem is, though, there are over 400,000 different species of plants. And so knowing, if you like, which ones are essential to ecosystem services, which ones there are knock-ons and so on, we simply don't have that depth of knowledge. And also, it's fair to say that knowledge is inequitably distributed around the world. If you look at botanical institutions that have documented that knowledge over hundreds of years, 85% of them are in the Northern Hemisphere. Much of the data which has been collected sits in dusty cupboards. It's not been digitized and isn't kind of available for people sitting in laboratories or remote sensing systems. And of course, the diversity is in the tropics. So, we need to come up with a much more equitable way of sharing that knowledge and that diversity. And of course, it's fair to say that an awful lot of knowledge is in the tropics as well. But we don't have that combination. And I think that's why this is a complex issue. And one of the things that we're interested in is developing capacity for a bottom-up approach, where people who know their own biodiversity are carrying out assessments of impact.
Thank you, Paul. Felicity, I would also like to invite you to maybe come on this point a little bit and perhaps also go into what you see as the main challenges of the current metrics and measurements of biodiversity, and maybe also the way forward. Like, what is your vision on that? So
yeah, I mean, I think what's clear is there's a lot of metrics, and the reason there's a lot of metrics, and there is a reason, is it is complex. So one of the first problems we have is alignment at a time where people are trying to make big statements. What is nature positive? What is science-based aligned nature targets? And that we can see that there is work going on as big financial institutions try to align. So you asked in the first, just to come back to that question, what metrics is most common to finance? I think one of the most common is STAR, which is species, threat, abatement and restoration. I have to always think, because I'm dyslexic, that I don't turn it around, STAR. There's biodiversity footprint methodologies, which are also used, but I would say predominantly in finance, it's a risk adverse approach, i.e. what is the risk to damaging biodiversity? So avoiding harm, so safeguards, and a little bit on top, so if they can green it. And I think this is a problem in Gold Standard's view. We need to get towards an impact approach, which is actually measuring contribution to improving. And I think this is the work that Paul's doing and Asger and Gold Standard, you know, like we're trying and up the ante because we have an emergency. So to put that into context, this wouldn't be necessary if we had listened to all the people 10 years ago. So now we have an emergency, more kinds of data are required. But I think it's really important to understand what that means. What do you mean by impact? That means, as Asger said, a kind of management approach. First of all, you need to identify what are your biodiversity impacts, and then are they material? You don't want to be measuring things that aren't material, like in terms of significant, because that's expensive. And then you need to sort of set yourself a goal. So if you don't have a strategy with a biodiversity target, just measuring what you're doing will be a measurement of failure. So that's what we can't, just avoiding isn't enough anymore. So you need to track that progress. And then you need to compare that. Have you made a positive impact? You need to compare it to something. So all those things, that measuring what you're doing, comparing to something that went before, and tracking, requires data. That's a lot of data. And as a standard, and I think I'm hopefully Asger and Paul will back me up, our question is to take that complexity of all that data and try to provide to finance a pragmatic solution. What's good enough so you can do better than just avoiding and go towards genuine contribution? So what's good enough? What is really the key measurements that will manage that change? And that's what we're working on. And we're looking first at nature-based solutions. But Gold Standard doesn't reinvent the wheel. So what we're hoping to do is to acknowledge and identify those standards that can contribute to that kind of measurement.
Thank you, Felicity. Asger, you also have your hand up, please.
Yeah, I very much agree to this, and also the importance of the work that we will be doing with IUCN together. I think just to come back to your question in the first instance, what is a metric? And I think this is where it's very valuable or useful to compare with what's happened in carbon markets and in the greenhouse gas sphere for the past 15, 20 years. That there we have a unit, it's a CO2 equivalent. We won't get the same kind of unit for biodiversity. I think we might as well just prepare for that. The metrics behind that is some of the ways that we calculate and add together the various greenhouse gases and global warming potentials and all that, so that we can, from changes in these based on project activities, then we can add up and report all of it and account all of it in a unit. The simplicity of this means that greenhouse gas impacts can be reported and ultimately, as we see in market-based approaches, essentially used for offsetting or compensation around the world and be fungible and tradable. Whether that's good or bad is another discussion, but it is more or less possible. Can we do the same in biodiversity? I don't think so. I don't think we can arrive at one metric and one unit, but as some of those schemes and standards that Felicity and Paul mentioned, are emerging out there, and there are a few more, we might be able to, I hope, converge around a few so that we can still make the market for financial sector, but also for other types of investors, and indeed any company that wants to take action on its own, to make it not as complex for them as it is in reality. There's a positive complexity here, and it's the likes of Paul and Felicity and myself and a lot of good researchers around the world that need to be able to simplify that into something that's workable, because we cannot expect that, well, we should perhaps expect that 9 out of 10 investors will walk away from anything that's too complicated. And that's simply the way humans act when they face complexity and they need to take action. So that's on us, and that's why we have this conversation.
Thank you, Asger. Paul, you'd like to shortly add to that? Then we have an interesting question coming in the chat box. So
yeah, so I think also, it becomes simpler on a site-by-site basis. Obviously biodiversity values will vary enormously depending on where you are. And we've transformed a big part of this landscape. So a lot of sites do not have particularly high biodiversity value, and we can assess that right off. But we do also have metrics that have been developed by BBOT, by companies like Rio Tinto, net positive impact, and so on over the years, that combine things like habitat intactness, species diversity, and what are the impacts, positive or negative, on those. And so it is possible, I think, to bundle those into something which, if you like, is comparable across the world. These are metrics that could be taken right across the world, but they will differ depending on site. And that's why, from our perspective, it's really important that you have the site-based element. What goes on in the ground is very different from a set of principles or a framework, like the STAR framework or STAR metric, for example. It's what goes on in the ground, and that we can verify that and calibrate with those principles. That's absolutely key.
Thanks, Paul. So I hear like a high-level metric, and then calibration and feeding in the bottom-up approach into the top-down one, so they meet in the middle somewhere. All right, thank you. Then we have a question coming in from the audience. How do you see the enabling of a flow of money from biodiversity depleted and oftentimes developed countries towards the biodiversity-rich developing ones? Is biodiversity worth anything in monetary terms? So who would like to take it? Felicity. Okay, thanks.
Hi, yeah, I think that's a really good question and a really valid one, and it lies at the heart of what we're doing. And one of the reasons we see how carbon has been monetized, and we also see increasing value given to biodiversity. At the COP, big statements were made. The GFANZ, I can't remember what it is, Glasgow Financial Alliance, something network, net zero network, something like that, made a commitment of 10 billion for natural capital investments. What does that mean? Is that going to go to low-income countries? Sadly, no. So some of these big investments are not going to them. Why not? Because of the risks associated with low-income countries, the normal risks. And this is what I mean by looking at impact. If you just avoid, you don't solve the problem. If you look at impact, you do. So it's really important that the metrics are used in order to measure the value, as this question raises, of biodiversity-rich areas. And impact metrics do that in a way that risk avoidance metrics don't. That's the first point in the answer. The second point is the way that we drive money to these might require some innovative structures. Landscape finance models, which look at, if you think of a landscape finance model, so think on this side of your screen where my hand is, because it's back to front for me, is where all the trees, and then sort of primary forest, secondary forest, and then think agriculture, and then think aquaculture, and then think the deep sea. So you've got trees to agriculture to sea. If you can look at those areas as different ways of monetizing, so where you have a primary income, let's say agriculture or timber close to the secondary forest, you can start seeing how you can sort of make claims, you can get people engaged in it, it'll actually be investable. And the rest of this might need some investment from those that recognize the value of the forest benefiting the water, benefiting the carbon. So we're working on a project with Chanel where they are actually supporting beyond their supply chain, where it's shea butter production, the forest. Why? Because they recognize how the forest, through good science, is contributing to the quality of the soil, which is contributing to the quality of their product. And they're interested in regenerative practice to maintain the forest, and they're beginning to get it. And that's interesting because the corporate is getting it in a way that maybe other investors aren't. And that makes me think, how do we, everybody talks about blended finance. There is that, you can get some grant money for forests, but it's not enough. So how do we utilize this interest from corporates who are being forced through claims, their corporate responsibility claims, a liability issue around delivering? And I think that's really, really interesting. I think the supply chain, landscape finance, and this combination of impact metrics, these three things are a very interesting space where we can address that issue.
Very interesting. Thank you, Felicity. There are more questions coming in the chat. So unless Paul or Asger, you would like to add on to this point. Asger is nodding yes, so okay, go.
Thank you, and I'd also love to hear Paul on this one. But just to add to what Felicity just said and the question, which I think is spot on, we talk about impact, and that's very good. We can always put a price on, let's say, the incremental change, and perhaps also a price on not having the detrimental change, which is what we do currently, and also what we do in carbon markets, where you have emission reductions or avoided deforestation. But I'd like us to move on, now that we're discussing metrics here, to think, what would it look like if we put a price on the actual ecosystem service provided, the grass, not the change? Because as long as we provide payment for the change, then if you then manage a huge asset in this term, being a lot of ecosystem service provision, let's say somewhere in global south, then if you just keep that stable at a fairly high level, you have no income. And why would you continue to protect it? And how would that facilitate, disregarding what kind of metric we then choose, the payments for anything? We need to move to the discussion of putting a price on ecosystem services in themselves for what they deliver every day to the rest of society, because that's where those developed countries in this question are highly dependent on ecosystem services outside of their own territory. They provide the clean air, the clean water, the global hydrological cycle, and so on and so forth. And that has a value to all of us, and we need to get there. But that's a different metric. That's not an impact metric. That's a provisioning metric.
Thank you. Very interesting point, Asger. And I think Paul would like to add to that before we go.
Yeah, I agree with that 100%. And I think so. We need to invest. If you are investing in forests, it's a long-term investment. It's an asset that needs to be managed and cared for. So we also need to be investing in those management skills and in the infrastructures which are required to maintain and manage those forests and the ecosystem services they provide and the carbon they provide. And I think that capacity building element, is an essential way to protect that investment, but it's also a really great way of investing in people. And as I say, in bringing in more equity related to knowledge systems, related to employment opportunities, and all of those elements as well. And when you look at biodiversity specifically, we do not have the infrastructures in place currently for incorporating, restoring, and managing biodiversity in the same ways we do for production forestry, for example. There's a huge investment opportunity and need to be investing in value chains and so on that support biodiverse solutions and the resilience that brings and the ecosystem services that brings, and provide, as I say, employment opportunities, new knowledge, and so on to local communities and people who are in those biodiversity hotspots.
Thank you, Paul. I would like to go to the next question, which is, what is the most effective approach? Is it to measure biodiversity and other ecosystem services independently from each other, or stacking them on top of each other, starting with what is most quantifiable, for example, carbon? And how can investment preferences for these attributes be tracked? Asger, would you like to reply to that one? And later, Felicity is also keen.
Love to get started. And thank you for that good question, Stephen. Great to have you in the audience. I think there are at least two replies to this. There is a realistic as is, and then there is the ideal situation, let's say 15, 20 years down the line, when we hopefully have a fully developed system of metrics and infrastructure and registries and all that to keep track of impacts. The question right now, I would say, as we see it, as what we hear in markets, and then most likely Felicity would somehow be able to confirm part of that, then it is carbon that drives the market right now. So you would need carbon somewhere to be quantified and to some extent commodified in order to drive any kind of financial investment, at least in 9 out of 10 cases. And then stacking biodiversity and water and soil and recreational values, social values, so on top of that to get a higher price on the credit or the compensation or the investment. I suppose that's what we can do right now. But it's a very interesting question, how this would look like 15, 20 years down the line, if and when we have metrics and units and all that in place for other ecosystem services. How do we foresee that system to operate? What if you have a carbon credit with all non-carbon benefits quantified and stacked for the pricing? Can you then, from the same area of land, also do a separate biodiversity credit, or is that then double counting, double claiming? I don't know. In which case, if we look into that world, that scenario, then a logical thought would be we need integrated registries and frameworks for all ecosystem services. And considering the time it took to negotiate and develop those systems for carbon, I'm just wondering, then we better get started last year, because this will be quite a challenge across biodiversity, water, all of it, how to keep track. That's one of the big questions where I don't really have an answer. Sorry for that, Stephen, but good question.
Maybe I'll come in now, because I think we can build out of the registries we've got, Asger. I don't think we need new. We need to build out and build more. You know, I don't think it needs to be just the players in the carbon market that need to, we need more players for sure. In response to this idea about stacking, I do think that we need to be talking about sustainable development. We saw the problems caused by a pure climate focus, you know, hideous plantations, lack of concern for native species, failure to consider soil because there weren't methodologies at the time for assessing soil organic carbon and the ability to absorb carbon. So you ended up with weird, perverse outcomes that didn't consider water. So great, you know, adaptation process that didn't take into account water usage, sort of stupid things, or plantations, monoculture plantations for sinks. And so we need to also make sure that with the biodiversity discussion, we don't get channeled. And that's why Gold Standard does require a commitment to at least 2 other SDGs, to also start thinking about just transition, which I think Paul hinted at, the importance of considering communities. So that's one thing. And in this idea of stacking, the word is attribution. So in an ideal world, like if you think about, there's a difference between contribution and attribution. And the difference is, imagine all 3 of us or 4 of us are baking a cake for our grandmother. Now I bring the butter, and Paul brings the flour, and Petra brings the egg, and Asger brings the, what did I forget? The sugar. And so we make a cake for our grandmother, and we all contribute to having a wonderful cake, and we're all happy, and we all claim we baked the cake. We all claim that we contributed to making the cake. But if the grandmother then gives me the cake and I sell it to my neighbor and take the money, the others are going to be pretty fed up, right? So if you take something back and you use it further on, then you have to attribute. You have to say, what is the value? Did we just all contribute to the cake 1/4? Or could we say, actually, we could have done without the sugar, Asger, sorry. So your contribution isn't as big as mine. And then you have this really weird thing. How important is sugar? Is a cake without sugar? What came first? You know, what do you need first? And then there'll be different recipes. Do you put the sugar in first or the egg in first? And that's the problem of attribution. And although mentally we want to do it, We don't yet have the tools for pro rata distinction. And it's interesting because some people would say at the moment, most of the logic around impact investing is on contribution, but people are beginning to claim those tons of CO2, and they will begin to claim we delivered this value. And why? Because the investors from governments are requiring that they report. It's the GCFs, the World Banks, our governments, UK, that want to report that our tax money is delivering. That tax money goes into an institutional investor that contributes to an impact fund. So it's not the impact fund management. The pull for that precision is coming actually from the people who are managing our money, the tax, the pension funds, and some high net worth individuals. They want that attribution. And that is causing a problem that Asger pointed out. What happens if you have a biodiversity claim and a carbon claim? And this is work that we're currently actually looking at. We're developing a standard for impact funds, and I invite everybody to come to our public consultation in February, where we think that we will have some solutions to that, or at least a first attempt, based on the current state of the market of what an impact fund manager has to be responsible for today. Do they need to go to contribution plus? And how do we get to attribution? We will need to get to attribution, we will. But we certainly don't have the tools yet to make that a viable economic option, but we should work to get there. That's what I would say. Sorry, that was a long-winded thing, but I think contribution and attribution are often confused, so excuse the grammar metaphor.
That was funny. Thank you, Felicity. I'm just having a look through the chat. There is one follow-up question from a previous one, from the first one that we got. Is it possible to monetize the conservation of biodiversity? Would that be the way to flow more money to developing countries, or what would be the mechanism to do so, in your view? So this is touching on the point that Asger was mentioning, that we actually need to put a value on the ecosystem services that are currently being provided. Anyone has any views on what could be the mechanism on getting this monetary flow to the developing countries? What would be needed for that? Felicity?
Collaboration. The biggest problem getting money to low-income countries is dispersed investment opportunity. Institutional investors don't like to invest under $200 million per investment. They don't, because of the transaction costs associated with it. So in order to get, they're tolerating lower rate of returns, but they want liquidity. One of the biggest myths in the market at the moment is that investors want high rates of return. Actually, a lot of investors are willing to take a low rate of return. I've been told by certain insurance companies who will remain nameless, but they're the big ones, you all know who they are, would actually take 4%. They don't need de-risking. What they want is liquidity. They protect our pensions. So it's a sensible wish. So if they get nervous, they want to withdraw. And so one of the biggest ways to get money to these countries is to look at how to provide liquidity, not de-risk. And that would be actually a really useful thing. And that's one point to remember. The other one is we have a big barrier on institutional investors getting money into smaller packages because of the very sensible risk management measures that occurred after 2008 financial collapse, which has imposed weighting metrics on financial flows, which means that if I want to invest in a low-income country, I have to hold more money in my bank account to invest. So it basically makes the overall expensive investment in low-income countries much more expensive than within Europe. And this problem, they did it for good reasons, because the banks overstretched and the market collapsed. But we do need to think about risk weighting and for sustainable development. We need to allow some greater risk for a greater impact or a greater, I really want to go to Asger's point, and I think he's totally right. What did you call it? The payment for eco services, you called it a provision metric. I think that's a wonderful thing that really does need to be developed. How do we value these eco services that don't have a kind of impact. They're not providing an income, but they provide a value that everybody on the planet recognizes. So that provision metric as well. So I think that is a question I threw back out, actually. Maybe Asger and Paul can add here.
I think Paul is keen to add at this point, so please, Paul.
Yeah, I mean, so moving away briefly from financial risk to reputational risk. At the moment, much of biodiversity is framed in reputational risk. If you are a mining company in Madagascar and you cause the extinction of a rare frog, then obviously that is a reputational risk. So to a certain extent, the extent to which companies are willing to invest in mitigating that risk can be monetized. But ultimately, it's going to come down to regulation by countries. And we already see that in places like Costa Rica, for example, where payment for ecosystem services is part of government infrastructures and so on, and people are paid to protect forests for a range of ecosystem services, including biodiversity. The same has been true with carbon, of course, is that we're looking for regulation to drive carbon prices up. I'm convinced that biodiversity will become monetized through government regulation in the not too distant future. We're in the middle of a biodiversity crisis. 10 years ago, people didn't know what biodiversity was. Now it's right up there on the political agenda, and I think that's coming. I think that would be a wise investment to make sure at least you're not damaging biodiversity, and better still, if you are investing in organizations and sites and so on that are enhancing biodiversity, that's going to stand you in good stead.
Thank you, Paul. So at least do no harm, and then ideally do good on top. Yes. There is one comment saying that the monetization is also very relevant in Europe, for example, to find more project finance opportunities for projects to apply the European Investment Bank's natural capital financing facilities. More of a comment than a question. And then let's say a bit of a critical note, and I don't know if anyone would be up for adding to that. Despite all your excellent experience and work, I get the feeling that nothing much is happening on a meaningful scale. As mentioned, corporates have a supply issue that depends on wholesome systems. Is there a template for corporates to engage fully? Paul, your hand is up.
Yeah, so it's not fair to say that nothing much is happening that's meaningful. We know, for example, that investors are concerned about biodiversity for the reasons that I've mentioned, and are looking for assurances. And I think are willing to pay for those assurances. So we're seeing that with large-scale tree planting programs and brokers and so on. That's coming through. For us, and I'm going to come from a technical viewpoint now. I'm a plant ecologist by background, and I'm one of 60,000 specialists within our botanical network. The challenge for us has been and will be to deploy that expertise where it's needed most, and also the data that we sit on. But bear in mind that there hasn't been the market for that until, or at least even the interest in that until very recently. So there's going to be a lag there with getting that expertise deployed. But I do want to say to this audience that we launched at COP26 the idea of a global biodiversity standard. We announced that we're going to be testing that with partners, including these guys who are with me on screen here, over the next year or so. And we're already testing it in sites in Peru and Brazil and in Madagascar to make sure that we have a site-based methodology that can be applied across the world following the same set of principles that is specific to biodiversity. That's the only thing that we're qualified in our network to measure. And that is underway. If people want to see it, then Google biodiversitystandard.org, and that sets out the framework for this. So engaging that biodiversity community, not just in setting principles around nature-based solutions or forest landscape restoration, but also in measuring what is happening on the ground, is absolutely fundamental. And that's about deploying a lot of people with a lot of specialist expertise. who currently might be doing other things. So there is going to be a lag here. And I think that is one of the rate limiters, is getting that expertise deployed.
Thank you, Paul. And I believe that Felicity would like to add this as well.
Yeah, yes. I hear you. It sometimes feels like nothing is moving fast enough, and that's why we're in this mess. But I feel like we're popcorn in the pan and the fat's just got hot. So I'm expecting a lot of pops. And the reason I'm saying that is that, you know, sometimes it takes a crisis to drive action. It's horrible, but true. And we have hit that wall. So the first thing is, I think that there's a lot of recognition, and corporates can do a lot. And corporates, I think, are currently the driving force right now in this area, because they, more than others, if you think about a supermarket in the north, dependent on bananas, mango, I mean, I'm being a bit, you know, just for simplicity's sake, bananas, mangoes, and papaya from the south, it's in their interest to ensure not only that they reduce their mitigations in their supply chain, but that the food that they're sourcing from one area, and they have relations, is as long as possible. So if they're going to reduce their GHG emissions, they might as well also invest in these relationships. And that is what I indicated. If those people at the sourcing end can collaborate with those who, you know, who can make the ask from those providers of, you know, like the supermarkets who club together, who buy those papayas, and say, we need the soil to be protected. That's why we need our forests. Look at, what about the water? So you need that collaboration and that coordination on the ground, which is, I think, some of the work that Paul does through his teams on the ground, and IUCN and others, and FSOs. I mean, there are people on the ground who see that in order to sort of make the right value for the investment. And these corporates will recognize it. They're already investing in adaptation. They're monetizing the carbon. And I'm sure, like the others on the panel, we will be able to monetize biodiversity soon, or at the very first step, nature-based solutions. IUCN is moving forward to do that. And I do think regulations will encourage people to take action. So yes, it doesn't look great right now, but we're just about to pop. The popcorn is about to start jumping. So watch this space.
All right, thank you, Felicity. So the popcorn is about to pop. I'm mindful that we're coming to the end of our session, and I would like all of the panelists to give a last small minute to stress their main point, or give you a takeaway from today's session. So starting with Asger.
Thank you, Petra. Yes, I have three takeaways. First one is that in maybe not now, but 10, 15 years down the line, we have to think in terms of ecosystem service metrics and not have carbon, biodiversity, water, soil. They need to be linked. You may be able to, in a specific setting, a specific project, a specific investment, prioritize one over the other, but we need to have it integrated. It's not a question of either or, it's all. The second thing, which relates to the last question here, on nothing meaningful happening, I'd say just bear in mind, as Felicity said, you can do a lot, but let's imagine financial accounting 100 years ago. It was very basic. What we're basically doing right now in high speed is trying to develop accounting systems that put value up and keep track of the value of nature across all its complexity. That will take some time. That is not just done. It took 100 years to develop various schools of financial accounting and principles and international guidelines.
Sorry, Asger, it's becoming a long minute.
And that's it. So that's the other point. And I think the third point is, let's see what frameworks can do. I'm very curious what CBD reporting requirements, UNFCCC, can we converge them? Hopefully, yes, that would be helpful. Thank you.
Paul, your last takeaway.
Well, first of all, I'd like to say thank you to both my I love your cooking analogies. I mean, we've had popcorn and cake, which you know is very topical. I've been watching British Bake Off. I guess my single takeaway really is we need a bottom-up approach, and that is site-specific and context-specific. And that's not just about biodiversity. It is about ecosystem services. It's about the whole sort of socioeconomic context, you know, in those different places. And also, we need to make sure that local people are empowered to carry out measurement of these metrics and so on themselves, and also are fully participating. So it's not simply about us looking from the north and saying we want assurances. It's about how we build that capacity together to manage biodiversity ecosystem services for all of us. And that's going to be a long-term undertaking. But as my fellow panelists have said, we are seeing a transition now in economics, natural capital accounting, and so on, that should give us the frameworks to enable us to do this. So I'm optimistic. I think you have to be in this business.
Thank you, Paul. Felicity.
3 points. We need holistic approaches, not just a pure biodiversity approach. So this ecosystem logic, we need to keep it in mind even while we're trying to do biodiversity. Standards have a very important role to play. Standards also not only need to do it for themselves, but collaborate. That's why I really welcome the collaboration with those on this panel. And we need to engage with corporates and the investment community to drive money to the south in order to make the biggest impact. Thank you.
All right, thank you to all my 3 panelists. I hope that everyone have found it an engaging conversation and interesting discussion. Thank you all for joining today, and looking forward to stay in touch and learn from each other's work and move forward with biodiversity and ecosystem services. Thank you all.
Thank you, Petra, for excellent
moderation.
I should add.
Yeah.
Thank you.